Hi you guys, welcome back to my channel. My name is Brad. This is a Firefighter's Financial Toolbox. Today we're going to talk about dividend ETFs. Dividend investing has become very popular in the last couple of years, and a lot of young people are discovering the benefits of having dividends and how they can work to build your portfolio. But here's the thing, a lot of people don't really know how to investigate individual stocks. It's a lot of work and it's really hard to understand. Each stock has its individual multiples, a lot of things that most people really, unless you're really nerd out on this kind of stuff, don't have time to think about. So what's another option you can do? Dividend ETFs. When you buy an ETF, you buy a share of that fund and you actually get access to many different companies all at once. Today we're going to talk about two different dividend ETFs, both from my favorite, Vanguard, that have low costs, are well diversified, and can be a good answer if you want to get into dividend investing without the headache of picking individual stocks. As many of you know, Vanguard is a giant in the fund industry, and we're going to talk about two large dividend ETFs that they offer and how the two ETFs take very different approaches in how they get their money and how they make their yield. First one we're going to talk about is the Vanguard High Dividend Yield ETF, ticker symbol VYM. Now VYM is the one that has the higher yield of the two. Gives you that little bit of extra income by using a simple methodology. They choose stocks that have a little bit higher dividend yield. Now, the portfolio is very diversified. It has over 400 stocks and they're weighted by market capitalization with higher concentrations in the financial, consumer, and healthcare stocks because those tend to have higher yields. Over the past 10 years, VYM has produced an average annual return of 12.9%. And now, while we can't depend on that going forward, and we all know that past performance is not indicative of future results, but it's keeping up well and actually with the overall market while offering an above average dividend income to its shareholders. And it's got a rock bottom price, you guys, 0.06% for an ER. 6 basis points. So basically you're paying $6 on $10,000 each year. As we know, Vanguard is famous for low costs. Okay, the second one we want to talk about is the Vanguard Dividend Appreciation ETF. That's ticker symbol VIG. Now, VIG has the same low cost, you guys, 0.06% or 6 basis points. So super low cost. However, instead of emphasizing high current yields, this ETF focuses on stocks that have developed a long history of boosting their dividend payouts year after year. So what does that mean? That means that investors will find many of the stocks in the ETF, and there are about 180 stocks in this particular ETF that have relatively low yields. Now, a lot of new investors, when they get into dividend investing, they chase yield. You guys, that's an appetite for destruction. Don't do that. Because the index fund tracks still lower yielding dividend stocks, as long as they've been committed, each company, to raising that dividend year after year to pay their shareholders more in the long run. Annual returns of 12.6% are still respectable. Now, as we said, you guys, that's past results. Certainly not indicative of what's going to happen in the future. But this is another solid ETF of companies who have consistently increased their dividend, albeit a little bit lower, but you also get the appreciation of the value in the stock price at the same time. So these are two very good options for a person who wants to get into dividend investing, but really doesn't feel like they have the time to do all the homework in investigating individual stocks. What do you guys choose? Do you choose individual stocks, or does an ETF that does dividend investing sound good to you? I have both. I have VYM personally, and I also have about 25 individuals dividend stocks that I track. Now, I've put a lot of time into these companies when I've done my research. And for a beginning investor who maybe doesn't understand how this works or doesn't want to spend the time on it, dividend ETFs are a very good and low cost way to get exposure to dividend assets and build your portfolio. All right, you guys, I hope you got something out of this. If you did, do me a favor, drop a like, subscribe to the channel. If you're not already subscribed, you guys hit that button, ring the bell. You'll get notified every time I make content. I try to make at least one a week. And if you guys have questions or if you have ideas for shows you want to see, put them in the comments. I will make them. All right, thanks a lot.